Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. As 2025 comes to a close, Korea's economy is ending the year on a stronger note than many had expected. After weathering a storm of global uncertainties, the country's economy has not only stabilized but made historic strides. Exports are on the verge of surpassing $700 billion for the first time ever, and the KOSPI has broken past the 4,000 mark, signaling renewed investor confidence. Now, with the South Korea-U.S. tariff deal now finalized and inflation somewhat under control, attention is turning to what lies ahead. How much of this momentum is sustainable and what risks still linger beneath the surface? For answers to this, we are joined by Yang Jun-seok, professor of economics at the Catholic University of Korea, here in the studio with us. A big welcome.
Happy to be here.
And also, we're going to connect to Professor Hwa-Kyun Kim, Professor of Banking and Finance at Texas A&M University's Mays Business School. Good to see you, Professor.
Good to see you again.
So let's start with Professor Yang. So after a rocky start to the year, where do you say the Korean economy is standing right now? How would you evaluate it?
Okay, well, at the beginning of the year, we're going through the aftermath of the martial law and going through the impeachment trials. Because of that, we had a very tough domestic economy. Our growth rate was expected to be around 2.0% when the year ended last year. But at the beginning of this year, that expected growth rate fell below 1%. And then, not exactly the beginning of the year, but from April, we had the Trump tariffs to worry about. So we were worried that perhaps exports would have a minus growth rate. But at the end of the year, I think we recovered pretty much from the martial law and the impeachment trials. Our growth rate this year will not be spectacular, but at least there will be perhaps better than the 0.8% that we have been estimating for most of the year. If we're very lucky, we may get around 1.0%. For exports, we were afraid of negative export growth rates, but it turns out that we may actually have a record-breaking export this year. And for next year, right now, our growth rate seems to be projected to be about 1.8 to 2%. That's about Korea's potential growth rate. So that's what we would have, I think, in a normal year. Some people claim that it's still on a bit of a negative side because we should have had some kind of a bounce-back effect because the growth was so bad this year. But I'll settle for normal growth rate. So in some sense, we recovered pretty much from the shocks that we had at the end of this year and the beginning of this year. But we still have some problems. The high exchange rate is one of them. But also, all the problems that we had last year, the structural problems, the declining potential growth rate, they're all still there. We haven't really addressed some of these long-term problems at all. So those problems are still there, and they'll still be haunting us, I think, for the next few years.
Mm-hmm. But not as extreme as the beginning we're seeing. But now let's turn to one of the biggest events that happened this year, the Korea-U.S. tariff deal, of course, which came through in October. But some details still need to be said on that. Professor Kim, what risks still linger for our trade ties with the United States?
So clearly, the new tariff deal with the U.S. has taken a big portion of uncertainty off the table, I believe, especially for like auto industries and some of the manufacturing goods. But like you said, there are still other factors that can cause the additional layers of risk and uncertainty. So obvious thing is going to be the kind of the tension between China and the U.S. because Korea is deeply integrated into supply chains that run through both U.S. and China. So especially in terms of like some of the key areas like semiconductors, batteries, and things like that, because China has caught up a lot, and then in certain regards, they're starting sort of like, to lead in some sense. So if Washington tightens export controls on China further, or Beijing responding to these kind of things as a retaliation measures, I think the Korea is going to get some hit on both sides, and this can probably increase the challenges in terms of like compliance risks, and also, from the middle side, how you are actually going to handle this is always very tricky and diplomatic, both also political as well as, of course, the business and economic issues. So I think that's going to be one thing. And as we also start seeing, European countries are also trying to tighten their security measures and also trying to use the tariff measures, kind of sort of mimicking what the Trump administration is doing. So I think that can be also a concern. And obviously, even without this US-China tensions, the US domestic market itself is going to be a big challenge. As a country that actually relies a lot on selling goods, I think it's going to be always a tough thing that if the political uncertainty is high, and then as we know, the US actually has this, it's kind of culmination point of the political risk and uncertainty. So I think that's going to be another key variable. And like, as you mentioned earlier, like, the financial and currency conditions probably can also play roles. Now, I think exchange rate is a little bit high, and also there are some other issues. So, I mean, it's not always a bad thing to have like the this depreciated won in terms of price competitiveness, but at the same time, Korea relies a lot on importing raw materials before they sell this kind of their own products. So I think that's going to have like double-edged sword, and funding cost also is going to be an issue if the exchange rate keeps deteriorating. So I think those kind of things are all some factors.
So even if the deal is in place, there's still a lot of variables in play. Now, despite the trade headwinds, South Korea is on track for a $700 billion in exports, which is a record, Professor Young. What actually powered that performance?
Okay, well, I think the biggest factor was semiconductors. Partially because the U.S. is right now gung-ho on building a lot of AI data centers. There has been a really high increase in demand for these high memory bandwidth semiconductors, and that has been very helpful for Korea. In fact, most of the growth in exports have been driven by semiconductors. But also, the exports to the United States did not fall as much as we feared, partially because some of the tariffs did not go into effect. The semiconductors and some IT products are still traded with zero tariffs. Some of the tariffs did not go as high as President Trump initially threatened. He initially threatened 25% reciprocal tariffs, but in the end, it turned out to be 15%. And even those were sometimes implemented with a delay, so that helped Korea. And I think some of those delays caused the American importers to buy more, just in case President Trump did raise the tariffs to high levels. They wanted to have a lot of inventory, so in some sense they hoarded some Korean products, and that helped Korean exports. And then also, exports to other countries picked up or did not fall as much as we expected. The trade to South Asia, countries like Vietnam, has actually increased. Automobiles, which were expected to take a hit because the exports to the United States will be hit by the tariffs, but exports to third countries actually did fairly well. And also those countries, they imported a lot of Korean intermediate parts, which in turn they would use to export to other countries. That also was not affected as much as feared at the beginning of the year. On one side, we had a very good year for semiconductors. On the other side, the other exports did not fall as much as we expected, and there was also a hoarding effect by the American importers. So I think those all fed into having a very good year for trade.
Very impressive numbers we're seeing indeed. Now, meanwhile, South Korea's KOSPI index also made history this year, surpassing the 4,000 mark for the first time. Professor Kim, what actually drove that rally, and what does it say about investor sentiment?
So, I mean, when we talk about stock market, then we can always decompose that into cash flow news and discount rate news. So, meaning whether like the country as a whole make enough earnings or the just creative cash flows that can sustain, that's going to push up the price. Or if the discount rate is low enough, then that's also going to push the price go up. I remember I talked about value of what are the issues about a year or a year and a half ago in this program, I think. So at that time we talked about governance issues. We also have country risk, and also we have a stiff competition with the rising competitors like China and other countries as well, and also the political uncertainty. So all these kind of things played major role depressing and compressing the stock price of Korea. I think still we have all these lingering issues, but I think these things now mostly lift up. And then there's a broader, I think, the story about Korea's resilience in a very complicated global environment, as we just talked about, just now. So despite all these tensions and uncertainty and political issues that we have gone through, the South Korea, I think, nicely just, handle these kind of things multiple times, I think, probably coming back from 1997, 8, I think IMF crisis, and also 2008 crisis, and also some other things, and then also the own problems that we had last year and this year actually. So all these kind of things nicely rebounded and recovers, and then that I think really pushed up the investor sentiment. Of course, strategic, the sectors like the semiconductors and things like that actually get lots of the big boost because of the AI revolution. So I think that's going to also be a major factor, so that Korea is going to continue to have big dominance in semiconductor market, and also the cash flow is going to be good. Therefore, investors, I think, start becoming more positive and optimistic about the stock price, and I think that pushes up the price. Obviously, those are the fundamentals, and in terms of sentiment, I think that Korea has very huge retail investor groups, and in part because of this, the policy changes, and also the strength, I think, of the some of this governance, I think, changes and things like that, I think push the investor sentiment a lot, I think, toward more positive zones and territories. So I think that a lot, I think, contributed to this, the huge surge, I think, in the KOSPI index.
Right, quite a rally we've been seeing. In fact, some people in the security market actually say that we're also looking forward to a KOSPI 5,000. Professor Young, how realistic do you think that is for next year?
Okay, for next year, I'm not sure. If I were betting, I would not bet on it. While not disagreeing with Professor Kim, I think I'm a bit less optimistic than he is. If you look at the KOSPI index, how it performed this year, I think most of the high performance were due to semiconductor and AI-related stocks. If you take those stocks away, the other industries did not do very well. And the a rally on the AI and IT side, I think were driven by the very strong AI-related investment in the United States, especially the building of AI data centers, which created a lot of demand for Korean IT products and semiconductors, and in turn drove the growth of Korean IT and AI-related stocks. But in the last few weeks, we've seen maybe some of that become less stable, partially because the U.S. is reconsidering whether AI will continue their growth. There's some talk about possible AI bubble. So in some sense, the investors are perhaps re-examining some of their AI-related investment, and foreign investors have been sort of reluctant to invest more in the Korean market. On some days, they're taking their money out. On some days, they're putting money back in, but it hasn't risen as much as it did, say, about a month or two ago. So if the U.S. rally continues in the United States, if they keep on building data centers, there is a chance that the KOSPI will hit 5,000, but I think that's unlikely. It really depends on how the AI-related investment goes in the United States and how that keeps up with the semiconductor exports for Korea. And it also depends on whether the stocks of other industries will pick up. Right now, it doesn't seem like the other industries are picking up, but hopefully if everything just works out, if people become very optimistic about the future, then there is a chance that KOSPI will hit 5,000. But I think that depends too much on a very optimistic scenario. I think it's more realistic to expect that perhaps it'll hit 4,100, 4,200, and maybe remain there for a while.
So not as fast, possibly, but we're gonna get there soon. Meanwhile, beyond the stock market, the BOK, it says inflation's eased to 2.1%, but the gap between the data and daily life feels wider than ever. Professor Kim, why do you think households still feel so kind of squeezed?
It's always a difficult question to answer, but then at least I think in terms of definition, the inflation itself is basically the growth rate of price level. So if I'm paying like say 1,000 won for like some goods, and if it's actually the 1,000 won, and then if the inflation is about 2%, that means like, next month or next year, it becomes 1,021, right? So if 1,000 won is already high, perceived as like high price, then it's going to be still high, in terms of perception. So I think mainly this is going to be like in a perception, and also of course the actual increase, because when we talk about inflation and also wage and then these kind of things, or the price level, then we use this term like stickiness. So everything seems to be very sticky, at least when we look at like the horizon of like the quarter to a year horizon, meaning the businesses or the manufacturers do not increase their price that quickly. So they just try to just use their inventory to handle these kind of things, to kind of to maintain the price level as much as possible, because otherwise if I only increase the price only just me, and then other manufacturers don't, then obviously my price competitiveness is going to be weakened. So I think there's kind of always kind of tug of war between when and how much actually the manufacturers will increase the prices. So it happens with lags. So given that, even if the data, which is lagging anyway, like 2% to 2.5% in terms of core inflation or the headline inflations showing very stable numbers, it doesn't mean that price is going to be perceived as low because it's already high, and also it still keeps going up. And with this lagging behavior of like a stickiness of the price judgment and things like that, you may see certain areas actually price surging up, which is not exactly well reflected in the current price data or inflation data. So obviously the households and businesses who actually have to deal with this like in real time may feel this kind of the gap, because it's not adjusted, but it's going to be adjusted, or it's going to take over time and price is already high. And given that, I think also the very high level of the household debt burden is going to also play a role, because like I said, the wage is also sticky. So my wage is not going up. I already have like high amount of the debt, and the price is still high. It doesn't go down. So I will feel very burdened. So I think that's probably what it is. And I think it's probably going to take time. At least the good news is inflation numbers are good. That means in the next quarter or two, we're not going to see too much of a burden as it is now, I believe.
Let's hope for that. In fact,
Let's hope for that.
One of the major variables that's also affecting inflation trends is the $1 exchange rate, which had spiked past 14.80 but suddenly dropped to the 14.40s today after a strong intervention by the FX authorities. Professor Young, do you think this signals a lasting stabilization trend?
Okay, I don't think so, but there's a possibility. So let me give you some reasons why. The foreign exchange authorities made verbal intervention or jawboning, and they introduced some policies, but I don't think they intervened in the market directly. They did not go out and buy or sell currency directly. Now, the way that the verbal intervention works is that if there's sort of a bubble component to the prices, so people are expecting prices to go up just because price has been going up, verbal intervention can work. But if the rise in prices is due to real demand, in this case, the numbers seems to show that the reason that the won has depreciated so much is that a lot of Korean investors, both institutional and individual investors, have been buying dollars to in turn buy U.S. stocks because U.S. stock market has been doing so incredibly well because of the AI rally. Now, if most of the depreciation for the won is because of that real demand, then I don't think this verbal intervention or most of the policies that the government has introduced will have a lot of effect. But if this continual depreciation of the won has built up an expectational bubble, as I said, people are raising prices just because prices have risen in the past and they keep on expecting the price to increase in the future, then the verbal intervention will, I think, have a fairly good effect. We've only seen the effect for a day so far, and tomorrow's Christmas, so there won't be any trading. But in the next week, if most of the prices were due to, most of the depreciation was due to the bubble, then that should work itself out with the verbal intervention. But if most of it was due to real demand, then I don't think this verbal intervention will work much. The exchange rate will go back to where it was yesterday in about a week or so. In a sense, we'll have to wait and see, but my suspicion is that it's more due to real demand than bubble. So we will see the rates depreciating again, at least until the stock rally in the U.S. slows down or stops.
Mm-hmm. Thank you for the clarification, Professor Young. So we'll have to see until the next few days and beyond. But as for now, we will have to conclude the discussion right here. Thank you so much for your insights tonight, Professor Young.
Thank you.
And of course, Professor Kim, we really appreciate it.
Always a pleasure.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.